here. Welcome back to Metals and Momentum, and I make this bi-weekly report for Substack subscribers, and this YouTube channel is all about just providing a little bit more visual support to that my Substack subscribers. So there is a free tier where we give away a lot of information in the free tier, and then there is also a paid tier that gives you access to a deeper look into what exactly I am doing with my own money. Now, the paid tier is very inexpensive. It's $9 a month. If you want to subscribe to that, then join me over on Substack, where you're going to get a deeper understanding of what exactly I am doing with my own money. Now, in this free option of Substack, I do go over a weekly watch list and such, and go over a number of different charts, but I'm going to take you over to my screen here, and this right here is the article that we are actually going to go over here. So this is my bi-weekly report. This one is titled "The Case for $21,000 per ounce of gold." Now, gold has just been on an absolute tear here, and this is something that you get in the free tier. This is the investment thought of the week. Now, normally I will go over this in a YouTube video later on, but in this bi-weekly update, what I'll take you through is just a couple of the charts that are in the newsletter. So whether you're on the free tier or the paid tier, you're going to get access to these things that I'm about to go over here. So first chart that we have here is the gold chart, and the gold chart is just looking absolutely unbelievable, really. Like, it's I'm a little scared, to be honest. Like, we've come so far so quickly, and I'm a long-term holder of gold. I've essentially been accumulating gold and silver for probably about like 10 years now. Silver majority of that time, but a little while ago we did get into gold, and it's been fantastic. I think our gold holdings are up 150%, which is pretty incredible. Majority of that was purchased in 2020 during that little like low when we kind of took a deep dive during the COVID crisis, right? So majority of my holdings were accumulated at that time, and it's just been a rocket higher. It's pretty insane. And as you can see on the chart here, I mean, since 2022, that's where we really put in that hard bottom. And ever since then, we started trading in these little channels. Basically, we started to create a large channel that's from here to here. But there are smaller channels, like, for example, from here to here within this larger channel, right? So I like watching for these channels, because then it makes it very easy to trade. So if I wanted to say get in to gold when we started to form this channel, then we can essentially find out that, okay, as long as we're in this channel, we're in a strong uptrend. Now we essentially, like, right around the beginning of 2025, we broke out of this channel, and then we started to get squeezed on this little it's like a upward wedge, and then that's where I started to get a little bit more concerned about gold, because I thought maybe, okay, we're gonna maybe potentially trade sideways here for quite some time, which we actually did, and then we could either break lower or break higher. And if we broke higher, then we would essentially be like in a parabolic move, and that's exactly what played out. It's kind of crazy to think about. And we are essentially in no man's land right now. If we zoom into the gold chart to take a little bit of a closer look on what's happened recently, we can see that we have just rocketed higher. We actually hit over $6,000 per ounce in Canadian dollars, but the chart that I'm looking at here is in American dollars, and we can see that, we've reached this top, and then we saw a massive sell-off. Like, this never happens in gold. Like, a sell-off to this extent, it rarely happens. The volatility is getting pretty insane, and that is also correlating to the volatility that is happening within the S&P 500. I'll go over this chart in a little bit more detail, but basically this candle right here in the S&P 500 was the exact same day where this candle right here and these candles kind of came into play. it started to get really messy in the charts ever since the S&P 500 took that little tumble, and that was the announcement of Donald Trump announcing a couple more tariffs and things like that. There's just the trade negotiations are throwing things for quite a loop. So things are changing by the day, but that's why you would subscribe to the paid tier of Substack. Metals and Momentum, $9 a month for you guys to do that. And you're going to get trade notifications if anything's changing throughout this period where you don't really hear from me, right? So the gold chart here is I've been hoping we pull back for quite some time, and we're actually getting that right now. Now we're also forming this little, it looks like a short-term bear flag. Basically, a bear flag is something that trades slightly upward. The more kind of slanted it is, maybe the worse, I guess it is. But basically, a bear flag is you're trading sideways and slightly upward. And usually what that results in is a breakdown further into the chart. And that's usually how it plays out. Now, it's not like a guaranteed thing. If we get a candle that breaks out of the bear flag, then, I mean, it's game on again. That's usually how it works. But the same thing is actually happening in the S&P 500. Now, the one thing that I will point out that is quite nice about the S&P 500, and maybe is not, we'll have to find out next week. It's going to be like Monday, Tuesday. We're going to confirm this little breakout here. But basically, we had the announcement of a lot more tariffs coming on into play, and just Donald Trump essentially created like one tweet and it threw the market off like crazy, and it was all to do with China. So the one tweet sends the market down, and then we entered into what is a bear flag. This is like the classic bear flag that everybody kind of monitors when you're thinking about trading in the short term. And I've been telling Substack subscribers that we need to pay close attention to this giant wedge pattern that is forming on the S&P 500. And essentially, if the S&P 500 goes down, then it's going to take a lot of other investments, including gold, down with it for the short term. Now, what I was reading in 2008, there was a period where the overall market started to crash, but the gold market continued to go up a little bit further. But eventually it gets to the point where, you know, shit is hitting the fan, so to speak, and it's just going to take everything down with it. And that's why I've been saying to Substack subscribers, we need to be fairly heavy in cash. So I've been telling people 20 to 30% cash right now is a really important place to kind of be, because once this wedge pattern breaks, and if this breaks lower, then we are in for a significant drop in the S&P 500. Like if we just measure out from where we are now to where the next support is, that's a 9.5% dive downward. If we break the 128 kind of level, then, oh man, like that's going to be pretty brutal. Like we could get down to 5,500 or so fairly quickly. So that's why I think it's really important to be cashed up right now. But what's really interesting in the gold chart, and I'm kind of hopping around here, but for good reason, because if we look back on the gold chart, I'm just zooming out a little bit further so we can get a better idea of what's happened historically. Now, the gold chart formed what is called a cup and handle pattern. So this is a classic cup and handle pattern right here. We have that giant cup. That's the little U-shaped kind of thing. And then we form a handle, which is like a downward / sideways kind of action. And then once we break out of and like complete that handle and break upward, we see a parabolic move upward on gold. That is a classic cup and handle pattern. And that's why I was I was pretty much 100% in gold prior to, you know, it was like 2022, 2023, like we were 100% in gold. And the same thing is happening in another chart, but I just wanted to point out the fact that this was such a strong indicator, and we were totally expecting a very large move upward in gold, and we've actually got it. But now that we've actually seen this parabolic rise, we have to make sure that we're actually taking profits here, because this normally does not happen unless there's some sort of financial crisis coming. And I don't know what that financial crisis will be in the future, but one thing that I have been reading about recently is that banks are starting to fail in the US. And a lot of these banks are failing because somebody will put up an asset to get that loan. So for example, I'm coming to you and you're the bank, and I'm saying I want a loan, and I'm putting up collateral for that loan, and say that's something like an office building, or some sort of retail property. And I'm saying, if I default on the loan, then, you could have that property as collateral. And what's happening in the US is multiple people are going to multiple banks and looking for loans from the bank, but they're offering up the same piece of collateral. So I have a retail investment property. I'm going to bank one, and I'm putting up the collateral, the retail investment property as collateral for a loan. And then I'm going to another bank and offering the same retail property to get another loan. And that is causing huge problems in the market right now. And we're finding out this right now as I'm kind of doing a little bit more investigations as to maybe why the S&P 500 might actually collapse and go back down to essentially like 5,550 or something like that, right? So I'm trying to find out what could be the catalyst. And I'm reading about these small banks that are finding out that their loans are actually a lot to do, have a whole bunch of fraud within them. And this is one of those things that, like, if it's happening to one or two, three, four banks, then it's probably happening to a lot of them. So this is one of the catalysts that I'm thinking about when looking at why would the S&P 500 float downward and just essentially collapse downward. But also when you take a look at valuations on the S&P 500, they're also out of whack. So when these two things are combining and coming together, that's making me very, very cautious. Now, there's another investment that I actually was looking at, and this is one of the Mark Carney stocks. Now, if we go back on Substack, there was a newsletter that I wrote, and it's called Mark Carney's Investment Strategy. And this was a stock that I actually found that Mark Carney is likely very heavily invested in. And we just went over that cup and handle kind of pattern on gold. And what's interesting is we are forming a cup on this stock right here. So I've drawn it out with a giant kind of U-shaped pattern. Disregard some of these measurements here, but I'm just looking at this U-shaped pattern, and we've actually not formed a candle, but we've gotten the breakout. Now this stock looks very interesting. This is Brookfield Business Partners. This is in Canadian dollars and available on the Canadian Stock Exchange if you are Canadian, and most of my subscribers are, and have access to these markets. But they also happen to have a ticker that is available in the US as well. So even if you're a US investor, then you can get in on this as well. So we have that giant U-shaped pattern, and then we get a break upward. So this is called a gap. And then usually what happens with when you gap up like this, generally that gap gets filled. So meaning that we should see a break back downward. And let's just take a measurement here. And I am going to go just like this. That is a 17% drop from where we are. That is usually what happens here, but it doesn't always happen. It's kind of like a 50-60% chance, like maybe that's going to happen. And I have measured the potential gain here for BBU-UN.TO, that's the Canadian version, to go up to $65. And that's basically based off of taking a measurement from the bottom of this U shape and bringing it up over here. But if you measure it in the percent gain, basically from the bottom of the U-shaped pattern to the top is 110%. Now, I think $65 is probably right, but if you measure it in percent gain, I'm just going to have to zoom out here because this gain is going to be so massive. I'm going to take away this trend line and look at this. Like the percent gain takes us all the way up to $82.61. So there is potential that this stock could go on an absolute tear. And one of the fundamental reasons why I think this might actually happen, $65 is my current price point, but $82 could be, you know, in the cards here. One of the reasons why I think that might actually happen is because Donald Trump continues to throw us for a loop and cut off trade talk and then bring them back on. And all of this uncertainty is going to force Canadians to find local businesses, Canadian businesses to work with and fill in those supply chain gaps while we have no idea what's happening with the US. So I think this is an interesting opportunity. One thing that you can get on the paid tier of Metals and Momentum is trade notifications. So when I send out a trade notification, you'll know exactly what I'm doing with my money, and then you can choose if you want to follow along there or not. One of the things that we did a little while back was send out trade notifications a little while ago when I was doing research into these Mark Carney stocks, and we're actually up fairly significantly on this stock as well. So it is one of my current holdings, and I'm looking to buy a little bit more, but I'm also trying to be a little bit cautious because this gap, most of the time, it gets filled. But we'll see what happens there. The other stock that is in our newsletter here, let me just make sure I didn't miss anything. We're going over the weekly watch list right now, BBU. The other stock that is, this is actually saved for our paid subscribers, but I'm going to give it to you here because, I don't have too many viewers on our YouTube channel here, so this will be something extra for our YouTube channel viewers. We've been watching EWZ, and it's basically been floating in this giant wedge pattern, and basically you don't want to catch like a falling knife. I guess let me turn this to a monthly chart. There we'll be able to see it a little bit better. So basically, I don't want to catch a falling knife, so I'm waiting for this wedge pattern to actually play out and break up outside of this wedge pattern. So I don't want to trade it before it breaks out, but basically I was thinking, okay, it's gotten to the bottom of this wedge pattern for a little while ago. I was thinking right here, this is a fairly comfortable level to kind of get in and speculate that we're going to break out, and that actually did end up happening. And subscribers of Substack got notifications that, you know, I was purchasing ahead of time of this break just in case it did break out. So this is actually documented on Substack. This is a trade that worked out really, really well. And basically we've broken out. I thought maybe, oh shoot, we're pulling back here. We're going to tap this line, and that makes total sense. This is very normal. We saw the Donald Trump tweet, and of course this broke the trend line. And then what's super bullish about EWZ is once everything started to like calm down a little bit, we actually got back up over this trend line again. And now we of course are well in the green on that trade once again. So the fact that we've now broken up out of this wedge pattern, we've came back, tested the wedge pattern, and now broke back above. This is very, very bullish on EWZ, and I was measuring out like we could return to all-time highs on this EWZ ETF, and the rise from here to the all-time high is incredible. Like it's significant. Like if we took this all the way back to the all-time high here, this is 230%. Now, this is probably going to play out over a very, very long time frame. And it's also reminding me of gold back in the day, like when it traded in that U pattern. I am making a bet that this EWZ chart is also going to create a U-shaped pattern and then break above and higher, almost exactly like what gold did. I think that's going to play out with the Brazil ETF. And there's a number of catalysts that we've gone over in prior newsletters to show you what is the investment case of Brazil. So you can go back on our Substack and look at that. I'm just looking at the chart here, but that is a chart that's super interesting. Now, the final thing that I want to talk about, and this is what I've been discussing with Substack subscribers, is, we got to be cashed up. We got to be very heavy in cash. And I'm thinking for my own portfolio, what makes a lot of sense is 20 to 30% cash. And I'm trying to stay within those levels. And, if there's an investment opportunity, then I'm definitely going to want to jump on that. But the most important thing right now is keeping those cash levels fairly significant. But I don't want to just sit there in cash and do nothing with the money. I want to be making a little bit of dividends from something that's relatively safe. Now, SGov is something that I've been looking at, and I have a portion of my cash holdings in SGov, and it's allowing me to capture a little bit of a dividend on SGov. So I'll show you on the chart here on the Yahoo Finance, you can actually see that this SGov has a yield of 4.35%. And what makes this so safe is this is a 0 to 3 month treasury bond. And essentially these bonds reset if you hold them from, like, say you bought at day one at the beginning of the kind of pattern that happens over in SGov. And basically these bonds reset. So you buy essentially like here, and then they will go up for a month and then reset. Go up for a month and then reset. And they will change depending on the interest rates. So if you lower rates, then these bonds will slightly go up in value. But if you raise interest rates, then they will essentially go slightly down in value. But for the most part, you essentially get this pattern that plays out over and over again. And this is what makes this it's almost like a cash holding in your portfolio. You could essentially purchase at the beginning of the month or whatever it is. You could essentially do this at any time. Even if you purchase, say, like right here, what's going to happen is you have the investment just slightly rise in value. We're talking a couple pennies here, and then reset. And then it's going to go through this whole process. So essentially after 3 months, if you hold the investment, you just get paid the dividend, and then all of your capital returns back to you. And that's what's so exciting about SGov, is that it's almost like a cash position, but you earn the dividend yield on that position. And I think that has to be a portion of my portfolio right now. If I'm looking to have excessive amounts of cash, but still want that dividend, that is something that I'm looking into very much. So if you enjoyed this episode, and if you enjoyed this type of research and updates, then definitely subscribe on YouTube. We do these on a bi-weekly basis, along with the newsletter that comes out to everybody's email who subscribes on Substack. Like I said, there's the free version. There is a paid version where we go over specific investments that I'm actually looking at, and then I give you indicators whether or not right now is a good time to buy, sell, hold, whatever it may be. And then we'll go into just a little bit more detail about some of the holdings that I have in there that are fairly active. Like, for example, if we just bought X stock, then I'm going to give you a little bit more details about that stock in the newsletter, and that's all available on the paid tier, $9 a month to do that. So if you enjoyed this, hit the like button for me. Let me know if you have any questions down below. That's where I'm going to leave it. Thanks so much for watching. My name's Anthony, and this is Metals and Momentum. We'll see you in the next one.